All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is January 22nd, 2025, year of our Lord, and we will be reviewing the Dow Jones, S&P, and the NASDAQ. Today was another no news type of day, and man, was the volatility sucky today. Like, it was horrible. Right, but we had a pre-market plan. We're going to go over that pre-market plan. We're going to review some of the things that, some of the trades that I took on the day, and then get you guys out of here pretty quickly today. Like I said, it was pretty much a nothing burger in regards to like the price action, but the plan was the plan. I had a pretty good plan, to be honest, and I followed that plan pretty much to the T. And after that, it was just kind of demo trading. After that, pretty much the rest of the day. So, okay. So if we look over here on the 4 hour, this was the macro, like I said, this morning was going to be kind of important, right? So current conditions, we were in the markup phase. We're in a strong uptrend and we were bearish as long as we stayed below this high up here at 752, 44,000. And we were bullish as long as we stayed above 176, which we did, right? As we discussed yesterday, above 216, we could see a short squeeze activity and the market is not showing signs of pulling back at all, right? And today, gosh, like the market was so bullish. Like it was just like, even when the market was selling down inside of this tight consolidation, it just looks so strong, even inside of the selling activity, right? So I said I would need to be patient and wait for my entry criteria to enter. And I think as we approach some gap closures on the 4 hour time frame, it would be a good opportunity to look for shorts at 44,604, which was up here, but we never really came up there. So understanding the trend is still strong. I will also be watching for 50% of all bearish dealing ranges we are approaching to gauge sellers, okay? So if you look at these DRs, these purple lines that I put, the purple line up here, the purple line here, and then the green line was my data high, right? For the week from the CPI candle. So this area pretty much, if I was to just draw a box, which I'll do for like illustration purposes, this area right here from this purple line to this purple line essentially was my supply zone on the day that I was watching, right? And if you went down to the 1 hour, you could have found a really nice supply zone right there. But anyway, the range that we were in, the white boxes, 44,276 to 44,232, 44,176 to 4125 at the lows. And then these yellow boxes are important too. These are something new that I'm trying out, but it's pretty much London and Tokyo high, right? Highs and lows. So this yellow box up here was London's high. So from 44,327 through 44,303, and then PM session high. So we essentially balanced out between PM session high and London high. Once we got above London high, we just continued to balance out between this supply zone and London high. We just literally bounced back and forth between it all day long. So my plan, I wanted to look to short and gauge sellers at this 50%. And you'll see kind of that's exactly what I did. And I made a few mistakes that I wanted to talk about as well. So let me turn this off and go down to the 15 minute. All right. Okay. Okay, cool. So we get down to the 15 minute, right? And the one thing that I was looking for is inside the 550, 610 macro, I actually stayed flat today, right? And I'm gonna show you guys kind of why I stayed flat. And again, this is just something that I got to work on a little bit is like, so 550, 610 macro, what I like to see is I want to get long. So I want the market to trade down, but I actually wanted the market to also trade into midnight price, which was 44,260 and London low at 44,242. The market never did that, but it did present a double bottom right here. And as easy as this looks, this was a news candle. Like Procter & Gamble had earnings this morning and this thing just rocket shipped up, right? So I was like, okay, I just missed that move. So I stayed flat inside of the London session. Hindsight being 2020, if I took this trade, this would have been my only trade of the day, right? My target would have been right inside of this little imbalance here and then I'd have been done. But I didn't take that trade. So I came back to the market and we got this push. I was looking to get short, right? Because we were inside of my 50%. I said, hey, the market's really bullish, but if I'm gonna short the market, this is the area I'm gonna look to short, right? So I walked away, I came back and we were kind of inside of this 859.10 macro. right? And I ended up taking shorts right at 397. Yeah, I got short 44 397 right on this candle here as we were pushing down. Market ended up pushing down a little bit, popped back up, and then we got this news candle. I went to break even, and I mean, this thing came right up to my entry by a point, right? I think it was at, yeah, the high of this candle was 395. My entry was at 397, and I had my stop at 396, right? Which is crazy. But anyway, it hit this area here and then pushed right down. I told the Discord, I said, my target is midnight, right? I wanted 261. I said, but because we're so bullish, I'm gonna trail this, right? That was my plan. As soon as I got in, I said, I'm gonna trail this, and then I'll look to re-enter if we come back up. So I trailed it down, and I got 72 points on the upside. Now this is where my mistakes came in, right? So these are the two mistakes that I made. One, this was 2 losses inside of this area, and then 1 break even inside of this area. So what I did here was I said, okay, we got these highs here, right? Because my thesis was, now we're going to start to sell off, right? So we had these highs here, right? And then we had these lows here, right? Let me get this rectangle here. We had these lows right here, right? So my thought process was, all right, we got a intraday chessboard here, right? So I need to, my problem was I chose the wrong side of the chessboard, right? We were at the low, but my thought process was we were going to get some continuation. So, and I didn't really short it at the level that I should have shorted it the first time. So the first time I got short, I ended up getting short like right here at 309. The market came and ran my stop. Then I said, okay, it came back up and I got short at 330, right? And then as you can see, this candle ran my stop again. And then over here, I took a break even like inside of this consolidation. Hindsight being 2020, again, things that I could have done better here was refer to my pre-market plan, in which PM session highs, this white box, should have been an area where I was looking for longs, right? I disobeyed my plan, but it doesn't mean that, you know, I'm gonna punish myself for it. It's just like, okay, I saw the market in that time. I saw it to be a little bit more bearish, and I'm a reversal trader, so I had no business looking for shorts down here anyway, right? I just had FOMO, right? I gave into my emotions of FOMO, right? And I was like, well, I don't want to miss the bigger move, right? I only took 75 points. I don't want to miss the bigger move. So I ended up getting back in and losing money, right? But I got back on my horse. Market pushed up here and I took another short, right? I took shorts at 387 this time, right? And then I again trailed it down to this level. And then the market continued to do this pop up, drop down, pop up, drop down. And I went into my demo account again. And I said, okay, I'm just going to practice scalping this because I want to scalp this into midnight, right? In my brain, the market's going to return back to midnight. It doesn't have to do this every day, but that was my thesis behind these trades. So every time the market popped up, I just get short and I trail it every time I was up 40 points in 2 minutes, $400, $800, $1,200. And as soon as we hit midnight, I said, all right, I'm done shorting the market. Now I'm looking for longs. And then I took longs and I got long at 44,270, right? I rolled that up to this level here. And then Justin and I were talking for a little while after the market closed. And we started just kind of playing around, taking trades and demo and whatnot. But ultimately, on days like this, guys, I can't stress it enough to understand that, like, when the market is choppy like this, you just need to trust your levels, right? Like, that's the one thing. Even though I took a couple losses in this little consolidation, these weren't my levels. Well, these were my levels. I was just in the wrong direction, right? So I'm not upset with what I did here because I know that that was just a, you know, slap on the wrist. Don't do that shit no more, right? But I'm proud of every trade that I took today because I trusted my levels, right? When the market got there, I said, okay, this is the level that I'm looking to short. I'm going to follow my pre-market plan. And if I'm wrong above here at 44.10. Look at this. The market really never came back up to 44.10 until the end of the day, right? I could have easily took shorts at 40, and this is something that I'm also working on, but I know I'm never going to do this, right? Like I should say I'm working on it as a potential of something that I'm thinking about doing, but I know I'm never going to do this because, and I'll tell you what I'm talking about. When I took shorts here at 9:29.30, right? When I got short, well, I got short on the 9:10 breakdown, but on the drop down, the market dropped down almost 150 handles. I need to be taking profit right there no matter what, right? No matter what, right? I trailed for 72 points or 75 points. I'm not mad at that because I was looking for a bigger move down to the fair value gap, right? However, if I'm thinking about this on a day where we're consolidating, right? And I have my range already dealt out, there's nothing wrong with saying, okay, we're going to trust shorts every single time. And then when we get down to the lows, just go long. This was an easy day to turn into a range scalper. And I did it. I just stuck to one side of the market, which was shorts all the way until we dropped below midnight, which I thought was smart, right? So tomorrow, or the next time we get this inside range day, try to go back and back test a plan, right, to trade range days. We don't get these. I mean, we get these more often than we're going to get trending days, right? Especially with the VIX kind of pulling back a little bit. So like it would behoove you to understand how to trade these days because time does play a factor, but whatever time we get down to the low or whatever time we get back up to the high, that's your entry. Once you identify we're not breaking highs, we're not breaking lows, and then I'll give you another example on the 4 hour, right? I like to reference the higher time frame, right? Because that gives you the idea of what's happening. I mean, obviously this is in hindsight, but the problem is that this candle here at 6 a.m., the 4 hour candle at 6 a.m., was essentially creating our dealing range on the day. So if you just drew that line at 269, if we came down there, I didn't draw this line because I already had this big white box. Like I already knew what it was, right? So when we came down here, if we weren't going to break lower, we were essentially just dropping right back into 4 hour demand, right? We created 4 hour demand. We popped right back down into it and then pushed up higher, but we just couldn't hold or break, right? So pick targets, note for myself, right? Because I do this sometimes. I'll get in long here and my target will be like, breaking this supply zone or headed to this level because I think I know exactly what the market's going to do. That's one of my Achilles heels too, right? But instead, I'm going to pick targets where the market has been already, right? In this particular trade, if I go down to the 15 minute, when I took loans at 270, I got out here, but theoretically I could have at least got back to 389, right? But I did trail and I ended up getting stopped down on the trail. And then this consolidation was fucking 2 hours. So like, it was like, whatever. Ultimately, what I'm saying is like, don't waste this information that came from this day, right? The information that came from this day is great data to go look back and just back test this day. Like for me, I'm going to go back and back test, hit the rewind button. Even though I know what's going to happen, I'm going to go back and I'm going to leave my chart just like it is, right? And I'm going to go back and replay this day so I can make a mental note of how price was being delivered and how I should be looking to enter these trades, right? So it's just a little exercise I do with myself, after the markets close, but I wanted to share it with you guys. Now, to the cap master over here, ES. This instrument was horrible today, right? Horrible, right? Because although it looks nice and clean the way it was developed, I'm telling you, this market was consolidating for like 3 hours in this little level right here. Like this little cluster right here and this little cluster right here of the market trying to trade down was horrendous, right? Justin ended up, we were trading in demo. He ended up taking shorts up here and, finally getting this thing to come down. But man, the delivery on the S&P today reminded me why I stopped trading the S&P 500. Shout out to Trading Yoga Girl. She took her first loss of the week today, but she took it on the chin like it was nothing because she understood the information that she had was good information. She took a good trade. She managed her risk properly. The market just didn't agree. She ended up getting stopped out, but she was in profit at one point. But she ended up getting stopped out. And ultimately she had the right idea. It just wasn't time for the market to push down yet, right? But if we're looking at the 1 minute, right, in regards to ES, it was so ugly. God, it looked so ugly on the 1 minute. This is horrendous. Anyway, we traded down into 920, 930 and up into 950, right? 1025. I always tell people to pay attention to that 1037 candle. Today, again, like I said, nothing's foolproof, right? Today, it didn't really have any significance. It gave you an opportunity to get short, but the market ended up running that shit too, right? Whenever we're in consolidation and or supply, I've just noticed that the market does, it does the same shit. It always makes it look a little different every single time, right? I mean, ES was essentially on a straight line from 1140 to, I don't know, what was this? Yeah, 11 from 11:40 to roughly about 2 o'clock. ES was in almost about a 6-point range, right? Godspeed if you're trying to trade the S&P 500 in a 6 to 9 point range, right? Godspeed. You can't get long, you can't get short, you walk away, right? So when you see something like this is when I said, like, this morning for the Dow Jones, my filters was up, right? Because when I saw that 650, 550, 610 macro, it didn't do something that I recognize. I'm like, well, I've never seen this before. So I'm just gonna, well, it's not that I never seen it. I just didn't know what I wanted to do with it. So rather than just put a trade on, I just said, okay, I'll stay flat. No problem. Had it swept through midnight, I'd have been in that trade right away, right? But it didn't do that. It did something totally different. Now, the NASDAQ, from the PM session lows, I mean, this thing was just like a wake up and buy in Asia, right? Like, this thing was exhausted from rallying all night long in Asia from 21,778. By the time the New York session opened, this thing was already up 200 handles on the day, right? So it didn't surprise me when we rallied one time and then just consolidated all day. That's the gift and the curse about trading the New York session. The New York session can give you the speed and the volatility, but sometimes the New York session is just the scraps, so to speak, from what happened in Asia, Sydney, and London, right? A lot of times they say the cool kids have all the fun in Asia, Tokyo, and London, right? I mean, in Tokyo, Sydney, and London. And that's because a lot of the lows, not a lot of, the low or the high is usually placed in Tokyo, Sydney, or London. It's very, very rare that you get the low or the high of the day in New York, right? So just something to think about. Not telling you guys to get up early with me. I'm just saying, like, hey, this was the money right here. Like, this was the money shot. The money was, I don't trade Asia, so I would have never got this entry, right? But I mean, look at London, right? Bring in the low of the day, right? Other than Asia, right? And then the 550 macro was delivered much cleaner on the NASDAQ today, right? I don't trade the NASDAQ, but it's something that I like to pay attention to, right? So again, we get this rally up into, let's go to the 1 minute and I'll show you guys kind of like the crappy nature of New York today, right? So 920, we trade down, we push right up. When you guys see this, okay, you have to pay attention to what the previous time did. Like, we didn't get this look, but NASDAQ, man, look, when you see all of this buying coming in from here, right? And then from here all the way down, and then we get inside of New York, we make this high, rally down into 920, and then immediately take this high, shorts are done, okay? Just let this thing come down about 50%. You got a nice little fair value gap right here, right? On the 1 minute, right? Right there, right? You get 3 taps inside of the 1 minute and it's go time, right? The NASDAQ was a little bit more, had a little better price action than the S&P 500. The S&P 500 ES, it was trash today. Godspeed to Jay Seals and Big Marv and Trading Yoga Girl, because man. But the consolidation continued on your favorite homie, the NASDAQ, because it was in like a 40-point range, give or take, for about 3 hours as well. Today was just a consolidation day, right? The daily candle finished really nice to the upside, but most of that price action wasn't in New York, right? Most of that price action of this lower end of this candle, all of this happened in Asia or Sydney, Tokyo, and London, right? The New York Open, today it just wasn't it. And we always get one of those days. It's just the faster you can recognize it, right? And for me, I always recognize it by the fact that I'm very aware of how my trades usually play out, right? And like how much my instrument usually moves when I'm correct. And when that doesn't happen, I get on alert really quickly, right? And that's one thing that I noticed today was like the Dow Jones, I got in and the market dropped down 100 points and that was it, like 100, 105 points. And I had the top, right? It came roaring back up, but didn't break the high, right? I could have stayed in that same trade and then it came ramping right back down and went damn near to the same level, right? Barely breaking the low. And I said, okay, we're in a range. That's what it is, right? So whatever that it factor is for you, right, to identify these days, the sooner you can identify them, the better off you'll be, right? Like you'll definitely be able to turn into a scalper, so to speak. That's what I do. I shift gears and I say, all right, I'm scalping for 40 points. I'm going to 2 minis. I'm upping my size, and I scalp for 40 points on the day, because I know I can get 40 points no matter what the conditions are. So just something that, I would toss you guys as a little nugget, but that's it, man. My name is T Hobbs. The market was pretty boring today, so I'm not going to waste you guys' time. My name is T Hobbs. This is the market review, and I'll catch you guys on the next one, man. Peace.